Today is gonna be about everyone's second favorite Bitcoin Treasury company, Metaplanet. It will be about how they went from 0 to 40,000 Bitcoin holdings and becoming the third largest Bitcoin holder. So by the end of this, you will have a full understanding of Metaplanet and their capital stack and exactly what differentiates Metaplanet from all the other Bitcoin Treasury companies. So I really first truly came across Metaplanet in the summer of 2025, last year. And if you remember, in May, what happened is that the short interest was 25% of the float, and the stock went up day by day and halted. The Japanese stock exchange halted the stock every day as it hit the ceiling. So it went up 20% the first day, 20% the next day, and it seemed that the shorts couldn't get out. And this was really the peak of the Bitcoin Treasury mania that happened last summer. And it was a fascinating period for the Bitcoin Treasury space. And Metaplanet was the star in some sense. And the entire period of Metaplanet Madness, and it was BTC Bull Rider and Climb That Ladder had their episodes where they showed the graphs and charts of Metaplanet's Bitcoin holdings going up and to the right on a log chart. And everyone at the time was so bullish on Metaplanet. It was truly everyone's second favorite Bitcoin Treasury company. And it almost had an even more loyal fan base than MSTR in some way. And around that time in June, slightly after the slight short squeeze that probably would have lasted longer if Bitcoin went up in price, shortly thereafter, Metaplanet announced their 555 plan, where they plan to issue 555 million shares into the market. And at the time, their public float was about 700 million shares. So this program would have increased their shares by roughly 80%. And this was part of their larger plan to acquire 250,000 bitcoins by the end of 2027. And this plan, of course, was later revised about 5 months later. But on the first trading day after they announced the plan, and they issued the 20th to 22nd SAR series stock acquisition rights, they exercised 10% of the entire program and raised enough money to buy roughly 5,000 bitcoins. But after this, the Bitcoin Treasury bull run peaked and started going downwards, and the plan had to be revised. And today, all the Bitcoin Treasury space is in an entirely different environment. We're in a Bitcoin bear market. Bitcoin is $78,000, and all the pure play Bitcoin treasuries are trading below 1x MNAV, including MSTR, Metaplanet, Smarter Web, H100. I can go on. And currently Metaplanet has an 0.9x MNAV, and they have over 40,000 in Bitcoin holdings. So today what I really want to talk about is how Metaplanet went from 0 Bitcoin holdings to 40,000 Bitcoin holdings. And they pivoted towards their Bitcoin Treasury strategy in April 2024 when they made their first purchase, and they acquired 141 Bitcoins purely through cash reserves. And in June 2024, they fully adopted the MSTR playbook. By this time, MSTR had already paved the way for Metaplanet in some sense. MSTR had issued shares, they had their ATM program, sold shares, bought Bitcoin, and they had also issued a few convertible bonds. So Metaplanet, Simon Gerovich, and Dylan Leclerc followed in the footsteps to create the next great Bitcoin treasury. The problem is that in Japan, the stock exchange is more regulated than the US, so there's not a clean way to do an at-the-money offering. But the workaround that Metaplanet came up with, and that prior Japanese companies have used to have the same effect as an ATM program, is that Metaplanet issues share acquisition rights, SARs, to Evo Fund. And Evo Fund will exercise the stock acquisition rights and essentially buy the shares from Metaplanet and then sell them at the market. So it's like a middleman for Metaplanet to be able to issue shares. And before we go any further, I need to explain how the stock acquisition rights works. And this is also one of the reasons I made this video, because I was browsing X, and Metaplanet has just issued their 20th series of ordinary bonds. And I see so much misinformation about how Metaplanet is in this great environment and can get free loans essentially. But if you would dig deeper, these ordinary bonds are actually part of their SARS program. So I'm gonna get to that later. The SAR program, the SAR, stock acquisition right, is really a moving strike warrant. So Metaplanet gives these SARs essentially for free to Evo Fund, and the strike price of the warrant changes every trading day, and the strike price is the same as the closing price of the previous day. So if the stock price goes up on one trading day relative to the previous one, then what Evo Fund can do as an arbitrage opportunity is buy the shares from Metaplanet and then sell them at a premium at the market. And this way Evo Fund can make an arbitrage profit essentially. But the problem is that Metaplanet wants to buy the bitcoins immediately, and they don't want to wait for Evo Fund to exercise the stocks before they can purchase the bitcoin. So what Evo Fund does is that they issue these 0% coupon ordinary bonds with 1 year maturity to Metaplanet, so that Metaplanet immediately get the capital to purchase the bitcoin. And if you look at the data, these ordinary bonds are usually repaid within 2 to 3 weeks, because as Evo Fund exhausts the SARs, Metaplanet will use these proceeds to repay the ordinary bonds. So the ordinary bonds are not leverage. The ordinary bonds are a part of Metaplanet's ATM program. And from the time Metaplanet started their Bitcoin Treasury in April 2024 to about September in 2025, they had went from 0 to 30,000 Bitcoin holdings. And they didn't use any form of leverage to acquire the first 30,000 Bitcoins. It was purely through these stock acquisition rights and ordinary bonds that they managed to grow their Bitcoin holdings. And it was first in October 2025 when they started using leverage. That's when they that's when they first started using credit facilities. And they have 4 different credit facilities. And today they have $280 million outstanding in these credit facilities. It's 10% leverage, so it's very modest amount. Metaplanet is a very lean company that really leans on their ability to issue shares at the market to accumulate Bitcoin. And if you look at these credit facilities that Metaplanet has, they are actually based on the SOFR rate plus a spread. The coupon is the SOFR rate plus a spread. So, and it's dollar denominated. So, if Metaplanet truly had this great opportunity to get essentially free loans in Japan just because it's a low yield environment, then they obviously wouldn't need to get the dollar denominated debt. They would be able to get better debt in Japan. But this debt is very modest, 10% leverage, so it doesn't have a huge impact on their Bitcoin strategy. But what does have a huge impact on their Bitcoin strategy is the direction they're moving towards in the future. In December of 2025, they issued Mercury, and they raised about $150 million to purchase Bitcoin with this preferred. And Mercury is just like MSTR's Strike preferred, essentially. It has a 4.9% coupon and a 1,000 yen conversion price. And Strike, of course, has an 8% coupon. So Mercury has a lower coupon than the Strike. But that's really not because they're in Japan, I think. Because if you look at the conversion price, Metaplanet is trading much closer to 1,000 yen, which is the conversion price, than MSTR is trading to $1,000, which is Strike's conversion price. So it's really just that the embedded option on Mercury is more valuable than Strike's embedded option. And Metaplanet has also announced plans to list Mars, and the idea is that Mars is gonna list in this year 2026, and this is essentially the same instrument as Strategy's STRC, so it's gonna be a variable monthly dividend. And I think if Metaplanet can manage to issue Mars, then it's gonna be just such a huge deal for Metaplanet. That's really how they're gonna be able to take advantage of Japan's low yield environment. Because Japan has a $10 trillion fixed income market, and if they can have an STRC equivalent that's powered by Bitcoin, and even if it has like let's say it has the same yield as STRC of 11.5%. Then Metaplanet is gonna be able to have this great carry, just like MSTR is having with STRC. They're borrowing money at 11.5% and then buying Bitcoin, which has an ARR of over 30%. And then after the both Metaplanet and Mars matures, I think the variable rate dividend is gonna go down, and maybe even go down more than STRC is gonna be able to trade at, just because Japan has such a low yield. I think Japan's 10-year bond is trading around 2.3%, and the US 10-year bond is trading closer to 4.3%. So if Metaplanet manages to list Mars, it's gonna be such a huge deal for the company. And to this date, they have relied so much on just issuing stock to purchase Bitcoin, and they have been very good at taking advantage of all the opportunities and all the strong market conditions where they are trading at 8x MNAV to really just sell as many shares as possible into the market. Because Bitcoin treasuries are trading as a cohort. Either all the Bitcoin treasuries are going up together or they're going down together. So I think it's always a good idea to really capitalize on high MNAVs and to sell shares into the market. It's also a sort of arbitrage opportunities between different treasuries. So if one treasury is trading at a super high MNAV and another one is trading at a low MNAV, then investors are gonna come in and even it out. So if you're selling shares at a high MNAV, you're not really harming your own stock. You're really just taking capital from the entire Bitcoin treasury space, I think. But that's up for debate. And I think when you're investing in Metaplanet, what you have invested in over the past 2 years is really their ability to issue shares at market. But this is changing with their preferred instruments.